What is up, guys? Welcome back to this dividend portfolio. Thanks for joining me and following along. We're watching how this dividend portfolio can grow. As always, this is not financial advice, just entertainment, and I'm just sharing one of many strategies that someone who potentially is investing could be using. So I'm going to provide an update here to the dividends that we have and go through everything. This is the little chart that was made last time. The graph on the left side here is the total dividends, the sum of all the dividends for this year, and then the one on the right is the dividends for each month. So we're growing on both sides, and we'll look at all of the stocks or funds that are paying these dividends. And like I always say, we kind of just do things real easy here because, I mean, these dividends are going to be paying whether or not we get into all of the fine-tune details. I added some more funds. I told you guys I've been looking at more funds, and part of that is just diversifying. If you have dividends, if you have, if you're holding funds that are in a certain sector and something bad happens with that sector, it's going to affect everything, and it's good to diversify. I have seen some people's portfolios that seem like, I guess, what I would call like extreme diversification. They're holding like over 100 different funds. That might be too much. But I'm mostly doing funds. I'm not really doing individual stocks. So those tend to be where people are holding 100 or more different individual stocks. I think that's too much to pay attention to for most reasonable people. I have been pouring money into this as quick as possible. So you are seeing this grow. Part of why it's growing so fast is because of what I'm trying to do. So the total portfolio value is up to close to 9,000 now. Um, since, well, it's the end of the month, so I don't think we'll get any more dividends. Since last time we got this 15-cent dividend, and so on the right here, what was added for the end of the month is 847, 856, 1190, and 16 cents. That all came in the last week. So, which is pretty good. That's a total of $29 in about a week. And we'll see. Let's see. These are the holdings, but this is just a snapshot of those dividends that came in. Here's the 16 cents. Here's the 1190, 856, and 847, and here's the ones previous in the month down here. Um, so yeah, $29. Some of these are, one of these is pending, the 16 cents one. And I added quite a few new funds. I'm not going to go through all of them, but this is everything in the portfolio right now, along with the total returns. And so this green number here, let's get a good color. This number in green here is the total return of that fund since I've held it. I think it also calculates the drip from the dividends. So JEPQ, well, these actually came out in order. So my best returning is up 4%. JEPQ, yeah, these do not, they rebuy, but I'd have to do more calculations to say, because some of these are paying like really high dividend rates, and this number doesn't calculate that. Because some of these, if like clause, for example, I'll talk about that a little bit more. But so we're up 4%, 3%, 3%, 2, 2, 1, 1. The only one that is down is MSTY, and I said a few videos ago that this is, I'm aware this is definitely my riskiest position. between how they do this fund. It is very high dividend paying, um, but I knew this would be the riskiest. So we're down $56, but the dividends we've gotten paid are already more than the $56. Um, so I am still of the opinion that these other options are generally less risky. There's a few other new ones. You'll see this one's blocks. This is also a crypto, like Bitcoin type of thing. I only have one share of that, so just kind of wanted to see how um, it would behave in some other new ones. So we'll look at those in just a second. Um, so these are the recent payments. This is everything in the portfolio right now. So we have one, two, do we have 6, 7, 8, 9, 10 stocks? Yeah, 10 funds. That's fine. I mean, blocks, I'm more just watching. It's interesting. And then MSTY, we might leave eventually. And YMAX is paying a lot as well. So maybe we'll take a look at that one. Um, so that is that. And going back here, so in the yellow, on this yellow line in the middle, these are all the individual payments for the month of July. And in bright green, this is the total $125 for July alone. So we kind of exceeded our expectations, right? Because we said if this goes to 80 by July and maybe 100 by August. So we blew past that. Part of that is because I've been funding this strategy as aggressively. And then this says our, is this right? D8. Okay, this is not right. Why is this adding wrong? Oh, because this should say, this says the total for the year is 205, but that is not right because this should be the sum of, not really sure why this is came in wrong. We want the sum of all of these per month. Okay. Yeah, okay. So that I don't know why that was coming in wrong. 214 so far for the year, and we've been doing this basically since April, maybe mid-April, and so $214 basically in 3 months, and our monthly has gone way up. So let's do a little calculation if we can keep this going. So we have 1, 2, 3, 4, 5 more months in the year, and if we stay on track, 125 per month times 5 more months should be 625 more in the year, assuming I don't add anything else, and then plus the 214 would put us at 839 for the year, which is not bad considering we only started in April. If we had 125 times all 12 months, assuming all this keeps going next year we should bring in 1500, and probably more if I can keep doing auto buys in plenty of these accounts or for many of these funds. I think it's a good idea to set up auto purchases within your budget so you don't have to think about this and it's just automatically growing and growing and growing. Um, so some of the new funds, I won't go through all of them, but I don't believe I have talked about SPYT and GPIQ. So I'm not adding new funds at like an incredibly fast rate, but I do look at some of the ones that are different options. Dividend people will see I'm not really going for SCHD, but I have, this is only part of a larger portfolio. I have growth stuff in other places. Um, but from the research I've done, I do really like the idea of this entire strategy. I've seen some comparison videos on income, like these high income dividend strategies versus growth over time, like pure CHD, and it looks, I don't know, guys. It looks like this beats it. That's as far as I can tell. I I I don't know why. Be diversified is what I think in general. You're not seeing a person's entire portfolio if you're watching this. That's all I can say. So SPYT. Let me move the screen a tiny bit. We're on Yahoo Finance, which I think is good enough for this stuff. And so I got this one, SPYT. And again, I'm not buying all these different funds. Like, I'm not holding 100 different funds or whatever. Is this not going to load now that I'm recording? Or has this just not been around that long? Okay, SPYT has not been around for very long. Little down on the year. Maybe some NAV concerns on this. Now, since I started this fund, this strategy in April, I did not experience this big tariff dip like a lot of people did. So, and there might be a recession coming, whatever. But I like these because it's like buy and hold. There's all this stuff about NAV that I'm continuing to learn, but you can learn with me. I'm pretty confident in a lot of this stuff, though. So SPYT, uh, this is seems to me, you know, this is like a smaller fund with only 100 million in assets. There's like much larger funds, but um, the yield is 21.2%, which for massive for one of these funds that's not like, I don't consider this ultra high risk, right? Like MSTY, where we can look at that one next before I end this video shortly. But the expense ratio is only 0.87 and the yield is 21%, which is just, it's just nuts. This should, pay a lot, and this is doing a call spread, like a call option strategy. Um, Maybe I'll talk about that a little bit more, but I don't want these videos to be too long. The other one I got might be a little bit safer. This is an income ETF, a Goldman Sachs income ETF. Um, and let's see, I don't know how long this has been around. Looks like a little bit longer. Not a lot, though. I mean, this is kind of a newer thing. Um, since the end of 2023. Overall, the growth is a little bit better than the last one we looked at, right? It's like recovered more from the tariff dip, but it's all, it's all a trade off, right? So, anyways, the yield on this is 9.9%, and the expense ratio is 0.29. So, this is closer to clause, and I think it's great. I think this is cool. Um, what does this say? Um, 80% of net assets plus any borrowings for investment purposes in equity investments in companies that are included in the fund's benchmark. So I should learn more like how this one is. Here's the holdings. I don't know if this is an option strategy ETF, to be honest. Um, but it's way larger than the last one we looked at, right? The last one was 100 million. This is 1 billion. So, um, what, 10 times larger? And this is fine. So, continuing to diversify, like we said with these returns, right? So, the overall returns 4%, 3%, 2%. These numbers don't reflect the yield, right? So even if a stock or a fund stayed flat but paid this 9.9% over the year, then um, this number that's automatically generated is not reflecting that. My best example is CLOZ, which is paying monthly dividends, and I do not expect this to change basically at all with the type of fund that it is. I mean, it's up 0.6% since I've held it since April, but that's fine. And I believe this is my lowest risk. I think it pays about 8% dividend per year. And this is kind of like, it's almost like, from my point of view, it's like holding money in a high yield savings account, but instead of it paying 4% a year, it's paying 8% a year, which I think is great. You're beating bonds, you're beating high yield savings accounts, and it's paying monthly. So that's that. Let's look at YMAX because we got a lot of dividends from YMAX, right? We got 1, 2, 3. So I guess YMAX pays weekly. It's paying somewhere between $7 and $11 a week. So let's look at YMAX and then I will end the video. And like we expected, MSTY did go down. That's the riskiest position. Um, but yeah, look at this. This pays. This literally. Oh, let me move the screen. This is insane. So these types of things have not been around that long. I mean, it's down since its inception, but relative to the payouts, it's not down that much. And lucky for me, I didn't start buying until this area. But in a year, in a 1 year, it's down 24%. But the yield is 61% per year. So you're still ahead 40%, which is absolutely insane. Okay, well, 35%. Some of you, some of the nerds are like, no, it's not 40%, it's 35. Okay, fair enough. 61% yield with only a 1% expense ratio, like, it's just nuts. Now, I'm trying to learn more about the NAV. You can put in the comments, like, maybe you should, if you guys have something I could look up or whatever, to learn about NAV more. For example, the NAV on this is 13, which is like really low. So I think I read somewhere people are like, well, getting into a low NAV fund is like kind of like getting in early, like a low PE ratio or something. But that should mean it's riskier, I guess. And then some people think there's also like a slightly lower NAV. What was the other one we just looked at? GPIQ, for example, the NAV on this is 50. Look at the PE ratio is 33, which is high. I mean, it's not too high. It's healthy high, I guess you could say. And so another place I read was like, well, if you want safety, go for high NAV. Um, net asset value. I forget what it is. So I'll be trying to do more research. From what I've read, I've heard people say low nav is good. I've heard people say high nav is good. It might just be like a lot of other things with investing that there's just different styles. But one of the goals here is to just have people be able to follow around, follow along, be entertained, see some different options. Who knows? Maybe you don't know if you should invest or not. Maybe speak to a financial advisor, because this is not financial advice, but at least you can see someone starting one of these types of high yield funds, um, and watch what happens. Um, Watch how is it diversified, how is it um, how is it balancing risk. I guess before we go, let's look at the essentially meme stock in this space. This is MSTY. This is the fund I'm down in, right? This is the highest risk, very high risk. Okay. Why? Because you can't only look at the yield, right? I talked about the yield, but people know, oh, you can't just look, oh, big yield, therefore buy it, right? I said in other videos this was the riskiest position that I have, and like that turned out to be true. I think I'm hoping that this is basically a bottom, but look at this. The yield per year is 129%. Now, this can fluctuate a lot. Our last payment, because I haven't been holding this that long, but our last payment was $44, um, which was a huge chunk of the one. What did we make this month? 120. Um, so similarly, like, see, the yield is 129%. So the idea is, even if this fund dropped by 30% in a year, the yield is still 129, so you'd still be ahead based on the dividend payments, like massively. You're not even breaking even. You're still getting 100% yield. Now, being all in on a fund like this, I think some people are. That is obviously just their risk profile. At the end of the day, people think the younger you are, the more you can take a risk like this. Um, I'm not a fan of like just YOLOing in on something, and because can if something goes wrong, it can really set you back. So having that balance. I have some things that are 129% yield, some things that are, what was the other one, 60% yield, which is still insane. Some things like this, which are 20% yield, which is also like completely incredible from a general market perspective. Like, it used to be that generally, if in 1 year on average, you gain about, I usually call about 9% in the market. Like, if you're just trading and you're up 9%, you could basically sell and say, like, I'm good for the year. That's, from my sense, generally matching the market. So, this yield of 21%, you're basically doubling your average hedge fund if that's what you got that year. It's so that's why I say, like, it's crazy. It's it's so huge compared to just holding the general market. It's amazing. And then I've got ones like, well, look, I this to be honest, a clause is part of what kind of got me into this. That's why I've held it the longest. Um, I wanted to balance out my growth and what I considered like my riskier positions with something that was dividend but paying higher than SCHD. Of course, this doesn't want to load right now. 5 day, 1 month, 6 months. So comparatively, yeah, the yield is only 8%, which is basically the market, a little less than the market, but it'll just stay in this range, and that's cool. So it's about balance and having diversity. I mean, if MSTY something really blows up with that, I do not have all of my funds in that. That would be crazy, right? We only want like, let's see, if I'm holding 8 different funds, I only want like 10% of the portfolio in each fund. Um, but you know, that's all your risk tolerance. So that's July. I don't think there will be any more payments coming in for July, but $125 is way more than we expected to be at by this time, and I think it's only going to grow. And we're looking at what did we say? I mean, we're looking at five over $600 for the rest of the year, which is going to be awesome. So that's the video. Hey, consider letting me know if there is another fund I should look for, and consider subscribing if you want to keep following this fund.